What's happening, Bitcoin Bulletin crew? Get ready for a rapid-fire update that's about to drop some serious knowledge bombs. We're diving deep into how stablecoins like mUSD are revolutionizing startup payroll thanks to the US Genius Act. This isn't just about protecting salaries from inflation. It's about unlocking faster, cheaper, and more global payment systems for businesses on the cutting edge. Then, we're asking the big question. Will Bitcoin's incredible surge leave altcoins like Ripple and Pepeto in the dust? We'll explore how Bitcoin's dominance impacts the growth of these promising projects and what analysts are predicting for their future. Plus, we're peeking behind the curtain at how Bitcoin options traders are positioning themselves after the latest market dip. What signals are they sending, and what does it mean for the path ahead? And finally, we've got breaking news on Bitcoin spot ETFs seeing a massive $363 million outflow. Stick around, you won't want to miss this. Hit that like, subscribe, and ring the bell so you don't miss a single update. Startup Payroll is getting a stablecoin upgrade. Inflation is hitting hard, and startups are increasingly looking to stablecoins like MetaMask's mUSD to protect their employees' salaries. This move isn't just about hedging against a devaluing dollar. It's also about embracing the speed and efficiency that blockchain technology offers for payroll processing. With the US Genius Act paving the way with clear federal guidelines, companies are finding it less risky and more appealing to adopt crypto payroll systems. The Act explicitly clarifies that payment stablecoins are not securities or commodities, and it places strict requirements on stablecoin issuers, ensuring they are backed by reserves and only issued by regulated firms. This regulatory clarity is fostering greater trust and making stablecoins a more viable option for consistent payroll. The advantages for startups are numerous: significantly faster and cheaper transactions compared to traditional methods, especially for international payments, which can greatly improve cash flow. Stablecoins offer price stability, being pegged to assets like the US dollar, thus mitigating the wild volatility often seen in other cryptocurrencies. They simplify global payments by reducing the need for currency conversions and minimizing fees, potentially expanding a startup's global reach. Furthermore, the programmability of stablecoins through smart contracts allows for automation in payroll operations. MetaMask's mUSD stands out with its peg to high-quality liquid assets, offering a dependable option for employee payments. Its self-custodial wallet integration within MetaMask provides convenience for employees, and its cross-chain capability simplifies international payments. mUSD also aims for transparency with plans for yield sharing from reserves and will be spendable at numerous MasterCard merchants, making it easier for employees to use their earnings. While the benefits are compelling, startups must also navigate potential pitfalls, including ensuring the stability of reserves, staying compliant with evolving AML and KYC regulations, addressing the irreversibility of transactions, and overcoming potential tech hurdles. Don't go anywhere, because the implications of these stablecoin advancements are massive. Next, we're exploring if Bitcoin's meteoric rise is creating a roadblock for other crypto giants like Ripple and Pepeto. Bitcoin's boom, what's next for Ripple and Pepeto? As Bitcoin continues its impressive ascent, a crucial question arises. How does this affect the growth trajectories of altcoins like Ripple and Pepeto? Historically, Bitcoin's dominance tends to draw market attention and capital, sometimes at the expense of smaller cryptocurrencies. However, history also shows that certain altcoins, like Ethereum and Ripple, have managed to thrive even during Bitcoin surges, suggesting a complex interdependency. Ripple's performance appears closely tethered to Bitcoin's movements. Predictions indicate that if Bitcoin were to reach $21 million, Ripple could see a significant jump to around $544, highlighting a strong correlation. This suggests that Ripple's future growth is largely dependent on Bitcoin's continued bullish momentum. Meanwhile, Pepeto is carving out its niche by focusing on utility rather than just hype. It boasts a zero-fee exchange that facilitates fast, secure, and cost-effective cross-chain transactions. The project has also undergone audits by credible firms, enhancing transparency and building investor confidence. These features make Pepeto particularly attractive for the Asian startup scene, where it could streamline payroll processes and engage employees through its staking programs. While Bitcoin is expected to maintain its upward trend through 2025, potentially overshadowing altcoins initially, analysts believe that altcoins often experience a catch-up phase once Bitcoin stabilizes. For Pepeto, forecasts suggest a potential surge to around 0.000005 by 2025, with even higher aspirations shortly after its launch. But what happens when the market dips? The strategies of major players can offer vital clues. Next up, we're diving into how Bitcoin options traders are reacting to the recent crypto market downturn. Bitcoin options traders navigate the post-dip landscape. Following a notable dip in the cryptocurrency market, the focus shifts to how sophisticated traders are adjusting their positions in Bitcoin options. The extensive list of price points provided reflects the complex and dynamic nature of the options market, where traders are constantly hedging, speculating, and positioning themselves based on anticipated price movements. These figures likely represent strike prices, premiums, and various contract values that illustrate the intricate strategies being employed by market participants. The sheer volume and variety of these numbers suggest a high level of activity and engagement from traders looking to capitalize on or mitigate risks associated with Bitcoin's volatility. Whether these are calls, puts, or complex spreads, the data points to a market actively trying to price in future scenarios, especially after a period of correction. Traders are likely assessing whether the recent dip presents a buying opportunity or signals further downside. Their positioning in the options market can provide valuable insights into their sentiment and expectations for Bitcoin's short to medium-term price action. This strategic maneuvering is crucial for understanding the broader market sentiment and potential future trends. These options market dynamics are critical, but sometimes the biggest moves are seen in the most established investment vehicles. Get ready, because we're breaking down the latest on Bitcoin spot ETFs and a surprising outflow. Bitcoin spot ETFs face a significant outflow. In a notable shift for the burgeoning ETF market, Bitcoin spot ETFs experienced outflows totaling $363 million on Monday, with no recorded inflows across any of the 12 approved funds. These regulated investment vehicles, designed to hold actual Bitcoin and mirror its real-time price, have been a major gateway for institutional investment since their approval by the Securities and Exchange Commission in January 2024. This withdrawal marks a significant departure from the initial surge of interest, which saw the category attract over $57 billion in cumulative net inflows since its inception. Assets under management for these ETFs had recently surpassed $110 billion, outperforming some traditional ETFs and rivaling gold ETFs in returns. The funds have seen fluctuating flows throughout the year, with periods of high weekly volume contrasted by these recent outflows, often linked to economic uncertainty and institutional repositioning. Historically, outflows from Bitcoin ETFs tend to correlate with periods of price volatility. When the digital currency dips below key support levels, investors often pull their funds, a pattern observed earlier in 2024 during the conversion of legacy products like Grayscale's GBTC. The 12 SEC-approved funds, managed by major firms such as BlackRock, Fidelity, and Grayscale, represent the primary institutional avenue for Bitcoin investment within traditional financial markets. This outflow is a major development, but it's just one piece of the complex crypto puzzle. Stay tuned as we wrap up all the day's top stories and tell you exactly what you need to do next. And that's a wrap on today's Bitcoin Bulletin. We saw stablecoins like mUSD revolutionizing startup Payroll, explored Bitcoin's impact on Ripple and Pepeto, analyzed Bitcoin options trader strategies post-dip, and reported on a $363 million outflow from Bitcoin spot ETFs. If you found this update valuable, smash that like button, subscribe to the channel for more, ring that notification bell so you never miss out, drop a comment with your thoughts, and make sure to follow us on all our socials. We'll see you in the next one.